All right, guys, back to work. Hope you guys had a pretty good weekend, a wild weekend this weekend. Of course, markets are choppy and sideways right now, trying to digest that failed assassination attempt on President Trump over the weekend. Of course, we got some big corporate earnings coming later on in the week here. Now, I'll tell you, at first glance, these choppy, sideways, back and forth markets, they look pretty difficult to make money with. But I'll tell you, once you learn how they work and once you learn the best strategy for these choppy markets, they will soon become one of your favorite types of markets to trade. I love choppy, sideways markets. I have 4, maybe 5 trades I'm watching for tomorrow. And of course, as always, by the time we're done tonight, we'll cover entries, exits. We'll give you guys a roadmap to make some money as well on what should be a pretty darn good day tomorrow morning in our trading. Before we jump in, though, to my favorite trades for what should be a great day tomorrow, Tuesday morning, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you enjoy these videos, if you like these lessons, hit that like button for me and give me a shout out, give me a hell yeah down in the comment section below. Thank you guys so much for tuning in, supporting our channel. Enough of the intro, though. Let's get ready for what should be a fantastic trading session tomorrow. Charts are all ready to go here. Man, what a wild weekend, right? Nasdaq, triple Qs are all ready. The Emini and of course the SPY is ready. I have 3 very simple clues right now on these charts that are telling us where the winning trades are waiting for us for tomorrow. I have one very obvious clue here on these higher time frames, these 60-minute hourly time frames right now. We are bullish overall here on the S&P and SPY, and of course bullish overall right now on the Nasdaq and the triple Qs. I like to use these higher time frame, this 60-minute time frame, to give me the best overall directional bias in my trades here tomorrow. But the one thing this hourly chart, these time charts don't do is they don't help us time the best entries. So we know overall direction, but I'll tell you, I have 2 more important clues on our tick charts, our faster time frames, that will tell us how to time the best entry for tomorrow. We'll talk about that more in a whole lot of detail here in a moment here. But before we do that, though, we're going to talk about entries for tomorrow. Let's look at our schedule for Tuesday. There's one big market catalyst on our radar tomorrow. That, of course, is that retail sales number coming out at 8:30 Eastern time. That is the big catalyst we know about tomorrow morning. Of course, don't forget, later on in the week this week, we got ASML, we got Taiwan Semiconductor. Those big earnings come out on Wednesday and Thursday morning this week. We all know, everyone wants to know, does the AI boom continue? And that will be a good evidence of this later on in the week this week. So we'll talk about that as we go deeper into the week this week. Next few weeks are big corporate earnings, so it's going to be an exciting month of the rest of the month of July here. But keep your eyes, though, on that retail sales number coming out tomorrow morning, 8:30 Eastern time. Let's get back to our charts, though, because it's good to know when the news is, but hopefully by now you know, right? The money is made on these charts. I mentioned earlier, we know we have the overall direction is bullish. We already kind of know that already. Let's now drill down to some faster time frames, some tick charts, because again, the 60-minute time frames are great for direction, but they're not going to help us time the best entries for tomorrow. Over to our tick charts. Tick charts make pattern recognition a hell of a lot easier. This, by the way, is a 7,000 tick chart. All the time frames in the upper left-hand corner. And in case you're watching for the first time right now, this is the only indicator we need to find lots of winning trades each week. That's a 21 EMA. Add that to your charts, pretty much all you need right now. I have 2 very important clues here on these tick charts. One important clue goes back to last Thursday. Last Thursday, we had that big drop down after CPI, and the day ended in a range last Thursday. Now, one thing we talk about a lot here on these YouTube videos is that anytime we see a range and a breakout, I like to look for a breakout pullback. So it seems to me right now there's unfinished business for the buyers down there, 56.49, 56.45 or so. Keep your eye on that breakout pullback zone later on the day tomorrow, later on in the week this week. There's a similar zone there on the Nasdaq as well. That's one of the 2 very important clues we see here for tomorrow. But the biggest clue right now is this range right in front of us. We have a bull market up into a trading range. Now, ranges, you will learn to love range ball marks because ranges are very simple. Two things. One, ranges act like magnets. And two, they love to rotate back and forth. They rotate up and down, back and forth we go. So if you understand how this whole kind of game plan works, I want to buy off the low with some bear traps down there. I want to sell off the high with some bull traps, right? We buy low, we sell high, and we trade the rotation. Now, it's very important that we remember we're overall bullish on the higher 60-minute time frame. So the trade I use, the entry tactics I use to buy the low is going to be quite different than the entry tactics I use to sell off of that high. So we'll talk about how to buy low, how to sell high, and kind of think about trading fake out breakouts, right? Traps off the low, traps off the high. As we go deeper into the week, you have those big corporate earnings later on in the week here. Now, you'll notice right away here, we're kind of rotating, right? We're rotating now off the low of that trading range. So why don't we start first? Let's talk about shorting off the high here. I have 3 different types of bull traps I'm watching to short the high, and later on in the video, remember, I think the biggest money this week is made down here. Later on in the video, I'll show you 4 types of bear traps, different entry patterns, of course, because again, one's bullish and one is bearish. So as we go higher here, remember, my job is not to pick tops and bottoms. I don't have a crystal ball. We may keep going higher there and wind up trading breakout pullbacks off that trading range tomorrow as well. However, though, if I go higher here and I start seeing buyers come in and try once to go higher and try twice to go higher, I would like to use what I call a crown reversal pattern to short off the high. Now, in my free video classes, I talk about 2 entry patterns. One's a failure and one is a trap pattern. If you put a failure and a trap pattern together, you get what's called a crown reversal. There was one right back here, late morning, early afternoon, popped up, pulled back, buyers tried once, lower low, buyers tried twice. That is a beautiful crown reversal. Now, I get a lot of questions about these on the YouTube channel. Remember, it always needs to be that lower low in price because I want those buyers roped in so I can use their stops to fuel that move back down again. So one of my favorite kind of bull traps off the high here is we call a crown reversal. It's buyers once, lower low, buyers twice, and then just like we teach in the free video course, a nice strong red candle closing underneath that moving average. That is a crown reversal and a short back down again. Now, that is my favorite out of all of the bull traps off the high. But you know what? Sometimes we don't get that signal. Sometimes the market runs up and there's so many bears up here or buyers taking profit that we don't get the 1, 2, and back down again. It winds up V-topping and running back down. These can be frustrating, but once you know how to trade them, they get a whole lot easier. For example, most of the time when I see a V-top like this, it will begin to grind down that chart. Now remember, the market wants to rotate back and forth, right? So as it grinds down, watch closely here. I'm going to draw a trend line off those lows. I'm going to bring that trend line up around that high. I'm going to look left, find one of those prior swing highs that lines up near the top of that channel. This is almost always where the money is made on a V-top, right? This could be a bull trap. It could be a buyer failure pattern. Any of those lessons you got that you're learning in the free video course happen over here, right? We pop up, we roll lower, and we start rolling lower like this. It is no surprise. Mark off that low, mark off that high, look left, and right there, nobody was surprised this afternoon that bears came in and whacked that sucker right back down again. So we go up. Do we get the 1, 2 back down again? All right, we don't. Okay, moves lower, grinds down here. We draw our trend line off that low, up off that high, mark off those swings, and again, I want that short off of that high. Another variation of a bull trap off the high here. And also too, don't forget too, oftentimes we'll get these strong runs up. They'll retest the high. You'll get that double top, right? Kind of that double top off the high. And then we can do it again. So remember, double tops in these situations, in a range market like this, is another bite at the apple. So we may go up. We may get a bull trap off the high, crown reversal. We may run back down, and they may try to do it again. If they do it again, if they retest that high, again, I am not going to pick a top on this. But if I start seeing those buyers try once, lower low, try twice, then I know exactly where that crown reversal pattern is. I can short that crown reversal off that high, or if it V-tops and grinds back down again, I can mark that low, mark that high. Again, find that prior swing, and whatever you do, don't miss the short, that first test, right? That's the first touch of the high of that channel. And again, this could be a bull trap pattern like this. It could be a failure pattern signal, a pullback combination, any of the entry patterns you guys are learning in my free video course, which reminds me, we've covered a lot so far. I know that most of you guys and gals watching right now, you know these patterns. You're making money with traps a lot, whether or not you're with us or not in our trade room. But if you're here for the first time right now, this might be a brand new language for you. How do ranges work? What do bull traps look like? What's the proper entry signal? How do you manage all the trades on this? Don't you worry. I have hundreds of examples of this stuff all linked up in our free video classes. I'll put a link up top there for you, upper right-hand corner. Grab that link that popped up and take that free trading course, because I'll tell you, the strategy you're going to learn in that short video series will teach you a simple trick we use in our members trade room, so we always know where the best winning trades are going to set up each day. Most importantly though, I want to help you time the best entries. I want to help you start making money on your own. I'll teach you 4 my favorite entry patterns. You'll learn failures, traps, crown reversals, and a hell of a lot more. Guys, the markets are way too good right now not to make consistent money. If you're taking too many losses, if you're struggling to qualify for a funded account at Apex or Top Step, hit the link up top there. Take that free trading course. It is perfect for someone who's serious about making money in these markets. And also, too, keep in mind, too, I'm going to put all the important links tonight in the description of the YouTube video. I'll put the free class links down there. Start there first. Learn the basic strategy. Start making money on your own. I'll put my trade room membership links down there for you. We trade together every day in our trade room. I'll put that in the description for you. And also, too, I post a lot of updates on Twitter or X throughout the day. If you're on X or Twitter, give me a follow. Again, all the details, all the links you'll need in the description of that YouTube video. But again, make sure you take that free video course, because you'll learn more about bull traps off the high, V-tops, and how to use that directional bias to know which entry pattern will work best. So now at this point now, we know how to short this thing off the high, and we know some variations of that for tomorrow. Now let's talk about going lower, because, you know, like I said earlier, my favorite trades this week are down around those previous trading range. And remember, I'm going to use a slightly different technique to buy off that low as compared to selling off of that high. Let's go grab the Nasdaq here right now, because of course Nasdaq's getting lonely over here. One obvious thing right now on this Nasdaq, we are bullish overall, and something very interesting here right now in the Nasdaq. Strong run down. Look what's happening right now. The bears have tried once. The bears have tried twice. This thing now is setting up for a nice bear trap. This is that same crown reversal pattern, except now it's a bullish signal for the buyers right now. Higher high in price, bears once, bears twice, trap below that low. We talked earlier about a bearish crown reversal, buyers once, lower low, buyers twice, right? It's that same lower low bull trap off the high, that is a very easy way to make money off the highs in a range bound market. This is the same pattern. It's simply a bullish example, right, of that same bearish crown reversal. So bear trap is in there in the Nasdaq right now, but I think the most important clue, again, remember, we're not going to trade off a 60-minute time frame. The most important clue right now is always on the tick chart. On the Nasdaq right now, 4,000 tick chart, upper left-hand corner there. Once again, you'll notice here, that is that trading range right there. There is that trading range. Unfinished business here, as far as I'm concerned, in that 494, that 464 area. They have yet to pull back into that breakout pullback zone. Don't forget about the area for tomorrow. And as always, right, the same game plan on the Nasdaq here, because you'll notice there's that trading range, right in the middle of that range, or the chart is the range, right? We go up, we go down, we go up, we go down. Again, ranges love to rotate, right? We talked about how I want some bull traps, right, to short off of that high. We talked about crown reversals. We talked about those V tops as well. Just like on the S&P, we went up here today, buyers once, buyers twice, bull traps off the high. Look at how that run down, right? Mark that low, mark that high, go find some prior swings. Don't miss the short off that high. So same basic idea on the Nasdaq going higher that we talked about earlier on the S&P. Now let's talk about going lower, right? Because again, that seems to be where I would think the best money is made here this week until corporate earnings come out later on in the week this week. Now, as we go lower, I can be a little bit more aggressive down here. Now, I want you to look left. Look over right there, and right there, because this is what we call a failure into a trap combination. A failure into a trap combination. That's the sequence I'm looking for here for tomorrow. So for example, I want to go lower, and again, I am not going to pick the bottom. Stop blindly selling off the highs and blindly buying off the lows. It might make you money every once in a while, but it's not a long-term sustainable strategy. Don't pick the bottom. What I'll do tomorrow is wait for the price to pull back into that 21 EMA. Because for all I know, it'll keep going. I don't know how far it's going to go lower here. It's impossible to manage my risk that way. What I'll do is I'll wait for the price to pull back. This is a horrible spot to be a seller. If I can get bears trying once, bears trying twice here, see, now we got you, right? Now your stops are sitting right there, and I can squeeze those stops running higher. These are called failure patterns. Over here, right, we run lower. Overall bull market, right? Bears try once, bears try twice. There is your failure pattern right there. Now look what happens afterwards. Afterwards, what happens? It's a bear trap. It's a bear trap combination. So we go back to our chart here now. We now make that run going higher. My favorite way to add to my position, adding to your winners, is the easiest way to make a lot of money in trading. One of my favorite ways to add a position is to look for this pattern. A move up, a shallow pullback, and a higher high in price. Higher high in price, higher high in price. Move right below that low, move right below that low. This, of course, now is that, and again, you'll learn a lot more about this inside our free video classes, but this, my friends, is that bear trap combination. Now, traps are great by themselves, right? Traps are fantastic in almost any environment. When you combine them now with that failure in a trap combination as we rotate off the low of that range, that is a gorgeous, almost guaranteed winning trade. So one of my favorite ways to buy down here, again, don't pick that bottom, trap those bears in with a failure, grab that bear trap combination and leave that runner, because we know how ranges work. They want to rotate back and forth here. Now, as I mentioned earlier, I always love to go lower, trap the bears in and squeeze back up again. But remember, sometimes we don't get the signal. Sometimes it goes lower here, gets into my buy zone, but for whatever reason, there's so many buyers down there, it just whoop and runs right back up into that trading range. Now, these can be a bit frustrating and very difficult on our discipline, but once you know how they work, it's a lot easier to stay patient and grab the money out of these moves here. The trick is this: whenever we get that V bottom, it almost always begins to grind higher on the chart. Whenever we see it grind up like this, and again, once you learn how these range rotations work like this, all we do now is go out and draw a trend line off the highs, bring it down to that low now, right? Look left, find some prior swings. Now, again, I love traps, right? My favorite are traps here. Traps are not the only way to make money with this. Oftentimes, we get below that 21 EMA, the bears will come in, sell short right there, and that becomes a failure pattern or a pullback combination off that low. The bottom line though is, notice how this is the first test, right? We draw a trend line off the highs like that. It's the first touch of the low of that channel. First test is the best test. It's a trap pattern, a failure pattern, a pullback combination. And again, I realize this might be a brand new language for you if you're here for the first time right now, but make sure you take that free video course I talked about earlier, linked in the description of the YouTube video, and you'll be speaking this language in no time at all. Don't you worry, right? So a V bottom off that low could be a trap, could be a failure, pullback, first test off that low. And I'll tell you, sometimes we get lucky. Sometimes we get a second bite at the apple. For example, sometimes we'll go down, we'll get that bear trap, that failure pattern down there and squeeze back up again. But then for whatever reason, they run back down, they retest that low. Remember, a double bottom in an overall bull market with a range above us is a gift from the trading gods, right? So if I see this thing now, right, if we make that run going lower, again, we'll look for that failure pattern going higher there. That failure may run up. They may hold the underbelly of that range and run this thing back down. Now, think about this here real quickly here. Anybody who sells short right there, they're taking their profit. They become buyers now at that low. This is a great place to be a buyer, overall bullish, at a double bottom, range above us. This is the last place you ever want to sell, so do it again. Trap in those rookies, get that one, get that two, get those two tries. Again, why two tries? Because I want those stops, right? If you get stopped out short, only way out of a short trade is to buy your way out, right? Run those stops, and again, think about that pop up, that shallow pullback, that failure, higher high in price, into trap combination as I make that run back up again. Failure, trap, it could be the first time we go lower, almost even better when it retests that low, because now anybody who sold short, they're now taking their profit, they're buying down there. These are rookies coming in here, getting trapped in. Squeeze those rookies, run it back up, failure, trap combination. Keep on trading those reversals. Keep trading that rotation back and forth as we go. Like I said, once you learn how ranges work, you will probably look forward to these markets every day you trade. I wish every day was a range day. Now, guys, that is the game plan for tomorrow. Now, speaking of tomorrow, every morning, guys, the easiest way to make money in these markets is to come out and trade it with us every day at the opening bell. I'm going to put all the important links tonight, the free class links, trade room membership links. If I were you, I would start first on the free video course, learn the basic strategy, start making money on your own, and then you can upgrade to our advanced classes. Come join us every morning in our morning trade room at 8 o'clock Eastern time. All right, guys? We covered a lot tonight in the video. Hope you learned a lot. Hope you use this information to make a killing tomorrow, and hopefully I'll see you sometime soon and trade with me in the morning room at 8 o'clock Eastern. In the meantime, be well, be nice to each other out there, and you better be here next time. Adios, amigos. Bye for now.